I think at the end of the day, when it comes to dealing with people's money, there's also that trust relationship on the fact that, they're trusting you, and that trust needs to be really, it needs to be real. It can't be a trust that is built on some very artificial foundation.
Welcome to Multifamily Insights. I'm your host, John Casman, and I want to thank you for joining us for another great episode. If you're enjoying the show, do me one quick favor and leave us a rating and review. That helps other listeners find the show, but also gives us some feedback so we know what to do more of and maybe what things can help you on your investing journey. Now, if you haven't done so already, make sure you hit that subscribe button so you don't miss an episode. We've got a great show today. We're going to be talking to Ike Mutabanna. They say you're the average of the 5 people you spend the most time with. So if you want to grow as a multifamily investor, you have to spend more time with other multifamily investors. And an easy way to do that is to join our apartment investing mastermind group today. Just go to casmancapital.com and click on the mastermind button. Now, as a part of this group, you'll get access to expert trainings, group coaching calls, industry news and updates, as well as all of our webinars and workshops, including our 3-hour workshop on raising capital. Again, if you want to be around other multifamily investors that can help you scale your portfolio today and grow your network, make sure you're a part of the Apartment Investing Mastermind. Just go to casmancapital.com and click on the Mastermind button today. Ike
Hey,
Mutabanna is the CEO of 110 Equity, owning and operating multifamily commercial real estate assets. Currently, Ike's portfolio includes over 1,300 multifamily units, representing over $270 million in assets under management. Let's welcome to the show, Ike Mutabanna.
hey, thank you, John. Thanks a lot for inviting me, and good to sit down with you again.
Absolutely. Hey, Ike, I went over your bio at a very high level. Why don't you take 2 minutes and fill in some of those gaps?
Yeah, sure. 2 minutes. I'm gonna try and quickly push through that.
There's no
So
timer going, by the way. So, but you know.
no worries. We'll keep it short. Yeah, I mean, just background-wise, I grew up in Mumbai, in India. It was called Bombay when I left India, but now it's called Mumbai, one of the financial centers of the country. But I grew up in, more of a lower socioeconomic kind of background, and education was really my way out of that situation, right? So, went on to become an engineer, moved to the US for a graduate degree, and actually in University of Cincinnati, which is your backyard, John. So spent my first 2 years in Cincinnati, and then from there on went on, did a whole bunch of different things. I was in what used to be called optimization algorithms, and those are the early forms of what today has become the AI big thing going on. But I was in a very early stage of that. We really weren't focusing on AI. It was more about optimizing problems to make technical solutions better for everybody. So I was that in that career, and I was living in Boston for almost 15 years, and then made my way to Texas, Dallas, Texas, in 2014, and discovered commercial real estate. And that really began my transition. So I started there in a part-time basis, really feet on the ground, learning from other people, doing a lot of things, making a lot of mistakes, but then learning enough that I could establish my own business and really grow from there. So now it's been um, about 6, 7 years of being full-time in real estate, focused heavily on multifamily, but have dabbled a little bit in other asset types, um, and now focusing on really building from there on.
I love it, man. You got a great story, and talk about coming over to the United States, from India, using education as kind of that path to kind of create a different life for yourself.
Right.
Coming here to my backyard, Cincinnati, and ultimately making it over to Boston, getting into technology. You talked about kind of the early stages of AI optimization, and then moving to Texas and discovering
Right.
commercial real estate, and that's kind of been your focus for the last 6 or 7 years. What was it about commercial real estate? I mean, obviously, everybody listening to this show is interested in commercial real estate, but for you at that time, was
Right.
there something specific you were trying to solve for, or what really piqued your interest?
Yeah. Um, in the very simplest way, scale, right? Scale, I think, is what caught my attention. So when I first got exposed to it, it was really accidental. I was on a sales call, not a call as in, I was on a road trip with my head of sales. I used to be the chief technology officer of the last company that I worked for in Boston, and we were trying to crack open the Texas territory. So I was on my way here, and she had just invested in an apartment project. So talking about it, I was just intrigued because I had never heard of this concept before. My understanding of real estate investing had always been about buying single family houses, maybe a condo, putting it on rent, and then just having the entire headache of being a landlord, which I'd sort of shied away from over time, especially with the 2008, economic recession. I think that just sort of burnt me in many, many different ways. So I was very cautious about the kind of investing I wanted to get into. I wanted to get into something where I felt a slight bit of control, but at the same time, where I felt that there was some foundation below it and not just, stock market is just like paperware, right? There's hardware, software, and paperware. That's really what it is. And I wanted something that had that physical foundation, but created the opportunity to really grow from there. And the scale aspect of it is really what attracted my attention. So that's what got me starting the process of studying it and really trying to get into it.
No, I like that you said that because it's interesting thinking about that, you know, the ability to think of, the tangible aspect of it. You're on this, sales trip to go out to Texas to break into the market, learning about apartments. And you're right. And this is one of the reasons, most of us like commercial real estate
Right.
is that scale provides, a little bit more certainty, right? It's more predictable. You can run it more professionally. You can
Right.
hire better staffing. You can hire professional management companies. It's not just, some guy who has a real estate license and is renting out, vacant units when he can. You have
Right.
a professional, vetted property management company that has years and years of experience that understand how to manage 100 plus unit buildings, whatever it is.
Right.
And that just makes everything a bit more professional. And that scale provides, again, a little bit more of an ease of ownership and a lot of different abilities. So you kind of discovered at this time, what was it like doing your first deal?
It was extremely hard. Getting that first deal was one of the hardest things I can imagine, right? Because it took me a while to realize that this business is more than just going out there and finding a deal, right? There's so many layers and aspects to it. And I spent, in fact, when I first decided to get into the business, I focused a lot of my effort. I'm in Dallas, so I did certainly focus on the my backyard, the DFW Metroplex, but that was a super competitive market. It's been that way since the day I stepped into this business, and in fact, it's still probably one of the most competitive markets even in this environment. Um, but the other market that I really was trying to focus on was actually Ohio because I was familiar with Cincinnati, familiar with Columbus. I had, a relative who lived in Cleveland invited me over to come, examine that market. So I really focused a lot on Ohio in the beginning, and then found myself in that strange situation where I was finding deals, I was bidding on them, but I was shying away at a certain point when it became competitive because I wasn't confident that I had the capital locked behind me because I'd never done a deal before. So even though I talked to a lot of investors, the reality is investors, prospective investors will say yes initially, but how do they have the confidence that when you present the first deal, they'll actually get in? And how do you have the confidence you'll raise the money? And I think that dilemma is what really held me back in the beginning. I spent almost 6 months, you know, almost getting winning deals and then shying away because I was not confident I could raise the money. That's when I decided that my next step, if I really wanted to break in, was to partner with somebody who had the solid experience to back things up, where even if I was the feet on the ground, their experience would hold me steady so that I could then, help my investors get comfortable with the fact that I wasn't just, cowboy out there trying to figure it out, right? There was some real backing behind it. So that's really what changed it. My first deal then ended up being in DFW with a much larger operator, with whom I'd become friends over time, and that's really how the whole journey began.
Yeah, man, I really like that you stated that you were getting close on deals. One, that you're in DFW obviously makes sense. Has been and is
Right.
still one of the hottest markets in the country, if not the hottest market. Definitely been top 3 or top 5 for the entire time I've been investing in multifamily.
Right.
So understand the competitiveness, especially starting out. And I think that's the key, right? When you're starting out, it's hard for you to win the really good deals when it's that competitive. So even though you're local, you had a lot of competition. I mean, those brokers are
Right.
not calling the newbie to say, "Hey, I got this smoking deal. Do you want it?" Right? You're
Exactly.
going to get the leftovers. You're going to get the stuff that other folks weren't necessarily looking at. And starting out, you may not have the confidence to identify which one is actually a really good deal or a deal that you can make work versus something that may be problematic. So you start looking at Ohio, finding some deals and opportunities there, but realize, you know what, some people are saying yes, they'll invest, but not really that confident in your investor database. So you kind of pivot and work with another group that's more established. You can lean on their credibility and partner with them. And I think one of the insights there is you really, the first time you're out the gate, you really don't know how much you can raise. You're going to get people who make soft commitments and say, yes, I'm interested in investing. But when you put that first deal in front of them, some of them are going to shy away, or, now they're seriously thinking about it and they're asking better questions, or they realize they're not really ready and they
Right.
pull away. So one thing you can do is help remove at least one barrier, which is that experience, and partner or align yourself with someone who has more experience and has more credibility, and that at least makes it easier for them to make an informed decision. Going back to that first deal, right? You're
Yeah.
working with your investors, you're bringing them into this first opportunity. Based on kind of the previous conversations you had, just roughly, what percentage of investors or what percentage of capital you thought you could raise actually came into that first deal?
Um, that's a really fascinating story, right? So what happened was that I'd built up a small little list of investors that I thought would be the right fit to come into this, because I think when you have investors in a deal, it has to be right fit on both ends, not just for the investor to have a right fit in terms of being in that deal and liking the deal, but you need to feel comfortable having those investors with you, because at the end of the day, it's a symbiotic relationship, right? You represent them and you represent their interests, and you want to make sure that your interests and your values are aligned. So I built a really small list. It just so turns out that only two of those investors, I think I probably had a list of maybe about like 30 or 40 people that I really, had reached out to and would express interest. Maybe two people of those actually invested with me. But what happened was that while the others sort of shied away because they felt it was, just it was too early for them. They'd never experienced that before. The two people who did were people who I'd known from my past. One of them was actually a friend from college days. One is a friend I had made along the way. And both of them said, "Hey, you know what? Look, what you're doing, we trust you, Ike, because we're investing in you. We're not in, of course, we want to make sure the deal is great, but because we know you, we know that you are a conscientious person, you're an ethical person, values driven person. We're going to invest in you and trust that you're going to take care of our money." So I think that was, I think, where things changed, because then I was able to go back and say, "That's great. I love it. Thank you so much. Who else do you think that would share that sentiment from all the people we know?" And they said, "Yeah, yeah. I listen. We know these guys, right? You should go contact them. We'll put in a good word for you." And that's how it happened. So I started off after the first 1 month initially, right, from the initial list really falling off, thinking, "Oh my God, I don't know what I've got into here," to within the next month, it had changed completely. I'd managed to, raise more than the target that I'd set for myself.
Man, I
So
love that, Ike. That's huge and great insight, right? For anyone trying to do their first raise, you just gave a couple things. One, that initial shock. You make this list of 30 to 40 people, you reach out, and only two of them are interested in moving forward with the investment.
right,
But those two people, they believed in you. They trusted you. They've known you for a long time, to the point where they were open to the referrals. And I think that was really key for what you did, right? You asked them, who else do you know that may be interested? They were able to go back, think about some of the contacts they had, and they made those connections for you. They made warm introductions, and you were able to, work with those investors and actually exceed your projections based on these two people. And I think one thing everyone needs to understand is that When we talk about, you need to, for people to invest you, they need to know, like, and trust you. The people who do know, like, and trust you, they're going to be your best champions. They're going to go out there and they're going to be able to be advocates for you. They're going to introduce you to people in their network. They want to see you succeed because they want to succeed and they believe in you and they want to expand and extend that opportunity to other people in their circle. So, was there anything, I don't want to say holding you back, but these are basically connections of your connections. So, this is, one step removed. Did you feel any trepidation in reaching out to these people, the referrals? Or did you feel any pressure since you didn't necessarily have that longer term relationship with these level of investors?
Yeah, there is and there isn't, right? Because I think one of the key things that I realized in that process was that the fact that these two investors had expressed their willingness to invest with me because they were investing in me, that gave me the confidence to, when I approached these other referrals that I got, that hey, look, there's a reason why these two guys are investing with me, right? I've known them for this long. They've already, of course, put in a warm introduction, which already has solved some part of the initial hurdle. But for me to then be completely transparent, honest, I didn't hide anything from them. I told them exactly what my journey had been. I explained to them exactly why I was where I was. I explained to them the credentials of the operators that I was working with and why working with them was a good idea, what when they brought to the table and what I was going to bring to the table. Um, and without making myself seem bigger than I really was. I think one of the things I've noticed when I've been approached by potential sponsors of deals is they make themselves look much bigger than they are. And I understand that. Look, it's a marketing thing. I completely understand that. We all done that in some part of our lives in something, right? But I think at the end of the day, when it comes to dealing with people's money, there's also that trust relationship on the fact that they're trusting you, and that trust needs to be really it needs to be real. It can't be a trust that is built on some very artificial foundation. So one of the things I have done from that very beginning, when that deal was going on, all the way till today, is always been extremely real, approachable, honest, transparent, and very clear with investors. Exactly what we are, where we are, how things are going. We've always explained the good and the bad to investors every single time. Um, you know, things happen, right? This is life. Things happen. This is business. So I've explained to them that. I explained to them even my past experience before real estate in the tech industry, in the industry where I came from. I was working in a lot of startups. So even in those areas, my businesses had gone up and down, and I explained to them how I dealt with those, because what I wanted to do was build their confidence that as a business person, I'm not the kind of person who'll shy away the moment something goes wrong and run away. I'm the person who's going to confront it, who's going to keep finding creative solutions to solve it, and keep their interest front and center. That entire way of dealing with it is really what broke that barrier.
I love everything you said, and I hope people were able to catch it because you just gave some really powerful insights into winning people over through honesty and transparency. And one of the things that I like is talking about who you are at your core, and the values are really important. And the way you demonstrate that is talking about how you've handled various situations, particularly when there's bad news. And one of the questions I always like to ask new operators is, tell me about a situation that didn't pan out, or tell me about a deal that didn't go according to plan, because that starts to shed a little bit of light on who you're actually working with. And I'm less concerned with what happened. I mean, certainly we need to understand that a little bit, but it's way less concerning about what happened and more how transparent are they? Did they take accountability for their role? And maybe they had nothing to do with it. Like we had a contractor steal from us. I didn't steal it, right? But on the same note, I hired that contractor. So while I didn't steal it and he seemed, credible from everything we did, he passed the background test and all that, we had to revise our processes. So that's my lesson, right? My lesson is, hey, you know what? We want to change it and do X, Y, Z to make sure we don't have this happen. We want to make sure we get these lien waivers before we release funds. So all those things we learn from. And that's what I'm looking for when we're talking to operators is, hey, are you learning from the mistakes that you make? or are you just blaming other people? And that's a
Right.
great way for you to start to kind of wean out to identify who are those good operators and people you want to be in business with long term versus people who, yes, they may make you money on a deal, but if a deal goes sideways, are they going to be accountable? Are they going to be front and center? Are they going to be clear and transparent with what's going on there? So I love everything you said about how you kind of approach that to get those investors on board. Let's talk about one-ten equity, right? So you have had this company. You guys have over 1,300 units that you've invested in. Talk to me a little bit more about the company.
Yeah. So as a brand, it's fairly new. Just being, honest about that. I've gone through a few different brand changes over the time that have been in business, and this is really as a brand I've finally settled on is going to be my long-term brand because I think that's also a learning process, trying to understand what you stand for on a longer-term basis, right? Because initially, when in the rush of business, there's just so much going on that you're focusing on different things, and sometimes you don't necessarily focus on what that long-term branding image, what is it going to be that thing that's going to make you stand out. So that is something that is more recent where I've actually had the luxury of time to pay attention to it. Um, but really what I've realized over time is that um, the entire focus of how we've built the business has really been about three major things that we focus on. First is making sure that investor money is protected, right? So it's preserved, it's protected. The second thing is what are we doing to really create opportunities that are both lower in the risk spectrum, but at the same time provide um, opportunities for people in areas that they would not normally get into, right? That not normally something that they would just do by themselves,
Meaning
unless
investors, when you say people.
investors,
Got it.
exactly,
Okay.
exactly, right? So I mean, as a if I was purely passive investor, I was not an operator. I had to put myself in those shoes to think about what are the things I would appreciate getting into because I'm getting the opportunity, but I want to lower my risk in those areas, right? And not really spread myself in a manner where I'm gambling some of that capital. So really finding those opportunities that reduce that risk aspect, but also provide some very interesting, innovative ways of investing. And the third is how I can really educate investors, those who want to really become part of our project and our community, and grow from there. And perhaps some of them might even choose to actually adopt this as their long-term future, right? So that's really what became the legs of how we started trying to build the business. And 110 equity really came about. 110 is both a lucky number for me and my family in many ways, but it also really has a lot of layers of meaning behind it, right? It's binary code 110. It's also 110. Uh, you know one project 10 10x in terms of how you bring people together. Because a lot of what I've done in this business has been on the concept of bringing people together, right? I have not built a very strong marketing machine. I'm really not out there as much. Perhaps I need to be there a lot more than I am, but I really don't have a marketing machine. I don't have any kind of huge presence out there on social media or any of that. In fact, I talked about how I built my investor base initially through referrals. That has actually been the only way I've built my investor base over these years. And I've gone from being able to raise $500,000 to the last deal I did, I've raised almost $10 million, still from the same referral network, the word of mouth referral network, people trusting, building that trust, trusting each other, coming together. It made me realize the power of community, the power of people really coming together and building something bigger than they would by themselves, right? So 110 equity really came about with that concept that we're really trying to build everybody together. So even the logo has that concept where it's a circle, but it also has the 1 and the 10, and it's got things that show that it interlinks with each other. So finally put some thought into what my journey has been and how I could bring things together.
I love it, man. And I went to 110%. That's where I thought it was coming from. You're going to
Look
give
at that. See, that's
110%. So,
it's interesting. I've had more people come up with interpretations of 110 or 110 than
yeah.
I started with. I was just really trying to bring things together
Yeah.
in some silly geeky way, but it's been amazing. It's been amazing how positively it's resonated.
I love that, man. I love everything you just said, especially about how that referral network has started with, being able to raise 500,000 to now $10 million from that same group of referrals, and growing it organically based
Right.
on delivering for those individuals. And I think there's a great lesson and takeaway there. You talked about kind of the brand journey, and I think that's really interesting because people kind of get caught up in that a little bit. And when you think about the branding, the logos, the
Right.
names, and all those things, it can be a challenge for some people who aren't necessarily marketing savvy. Would you mind just walking us through kind of where you started with the original company and
Yeah.
kind of that? You kind of got us to 110, but walk us through kind of the evolution and maybe what you were trying to solve when you started to make those changes.
Yeah, yeah. So I think when I first started off, I wasn't thinking about branding at all. Really, I was really trying to focus on finding the best possible deal, the best possible opportunity, and to build that network of investors, build a network of members on the team that I could depend on to really put things together. So I really just picked my initials as the name of my company, right? So it's IHM, and I almost ran that for 2 years, maybe 3 years, just purely on my initials. And then what happened is that I started partnering with other people in some projects, and then with one other individual, we decided to join forces for a brief period of time, and we decided that we were going to find something that we could both depend on and bring together. But we really again didn't put too much thought and process into it. So you will not believe it, we were sitting one night and we were texting each other trying to figure out a name, and the entire process was based on what domains were available. So we found a couple of places where you could just literally generate names that which are, because every domain is gone. It's just insane. Anything that has meaning to you that you want to bring, it's gone. And he came up with Zane Holdings, right, as one of the domains that was available. I said, just book it and let's do it. Let's not waste time. So we booked it, did it. So we ran for as Zane Holdings for about 3 years after that. And it took me a while to merge, my initial based business, IHM, into Zane. But then, as I said, now that we've really matured in our thought process, we've matured in our as a business as well. We've got this, incredible asset portfolio that we've built, as well as a very strong investor base. It was time to start thinking about branding as a core piece of our identity. So
Yeah.
that's really where this whole thing has come about.
I love it, man. Thank you for sharing that. I think it's really interesting to give some thought to your approach and what makes you stand out, and landing on 110 equity and just understanding that journey a little bit more and what you're trying to convey to potential investors moving forward. Talk to me about the company. What kind of assets are you invested in? What markets are you focused on? What do you look for in today's market?
Yeah. So at the moment, we're pretty multifamily heavy. We've got three assets in. I mean, we've gone through a lot of full life cycle in the last 4 years with the market, you know, having gone well. But at the moment, we've got five assets actually under our portfolio. Three in Houston, one in Austin, and one in the DFW area. They're all different scale. The ones in Houston are all very high-end luxury class A kind of properties that we purchased, and it has worked well because with all of the things that are happening in the market today, those are the properties at the moment that are really maintaining their performance at a very solid level. They're definitely getting affected by the interest rate environment, so that is one challenge to solve for sure. But at least on the performance side, we're performing extremely well. Then we've got one asset in Austin, which is also a 300 plus unit, that is more of a class B asset, which has had its ups and downs, mainly because we had the impact of COVID, we had the impact of the eviction moratoriums. A lot of that really played a role. It is still a cash flowing asset, but where that one really shines is we got a very solid cost basis on it. We got long-term 10-year federal, Freddie Mac debt on it, so that protects it for a longer period of time. It gives us the time to ride this out and do well. And then the third asset, that the final asset that we have in DFW, is it's a smaller asset. It's only 24 units. That was an opportunistic purchase where we just happened to be in the right place at the right time. Broker with the inside relationship brought it to us, and we brought that in, and it's been one of the star performers. So it's interesting, right? We talk about scale. This is probably the smallest scale deal I've ever done, but it's actually outperforming every other deal I've done, which is much more larger in scale. So there's so many factors we realize that impact how um, these properties and assets can work that I think there's no real single formula behind it. But in terms of where we are today and where we want to go, we're going to continue being opportunistic in today's market and looking for deals that pencil out and can work. Our thinking has changed in a way. One way, both ours and our investors, is we're now thinking long term. We're no, earlier we were very focused on the short term flip nature of this business, 3 to 5 years at the most. In fact, a lot of things were exiting within 2 years, the way the market was. Now we're factoring in much longer time frames. So we're factoring in 7-year time frames, even 10-year time frames, and we're being a lot more patient in the way we're modeling these things to ensure that we not only ride out the current turbulence, but we actually are able to perform at a very solid level and create that long-term wealth. I think one of the issues is people talk about real estate as generational wealth, but they've lost sight of that because of the short-term flip nature of the last 4 years. So we're trying to go back to basics there. And the other thing that I'm now really also focused on looking into is ground up development. So I've been working for the last 2 years on opportunities there, and that's a different beast altogether. It takes a long time because of the zoning process, permitting process, but we're slowly getting there. We're getting to the point where we can launch our first ground up development project.
Yeah, man. You mentioned just the Texas markets, Houston, DFW, Austin, some of
Right.
the different ways you're approaching those markets, focusing a little bit more on longer term holds at this point, but also getting into ground up development. So a lot of diversification on what you're doing today. Again, if anybody wants to learn more, they can go to your website, 110 Equity. That's 110equity.com. We're going to go to a round of insights. You ready, Ike?
Let's do it.
All right. Give me a failure or an apparent failure that set you up for later success.
Yeah, I mean, in fact, the two failures, and both are very similar in nature. Both were projects where, um, you know, there were unexpected things that hit those projects. One was where property taxes just shot through the roof because, when we purchased it, it had a particular basis of appraisal, and sometimes you can't predict how counties decide to do their taxes appraisals, especially in Texas, which is very sensitive to yearly annual appraisal, the annual appraisal process. And the appraisal shot up by 3.5 times on valuation. In fact, the valuation went higher, almost $2 million higher than our purchase price. So it was a long process trying to fight that battle. And we eventually, after almost a year and a half of fighting litigation on that, we managed to get it down to purchase price, but that was still higher than what we had actually projected, because typically in the market, people try to project somewhere between 80 to 90% of purchase value over a 2 to 3 year period. And we got hit like in the very second year with a massive increase. So the cash flow on that got really squeezed. And that was one of those deals which was not meant to be a long-term deal. It was meant to be a short-term deal. But, with where we were, we decided to then, cut our losses and make sure that we take care of investors. That really became the bottom line. We found a buyer who was a long-term hold kind of buyer and who was willing to work with us, where they actually paid off 100% capital return to investors and took control of the project on an acquisition of the entity rather than the property, because they were afraid that if they did the property acquisition, that would again screw their property taxes. So we had a very creative structure we came up with, but we managed to give 100% capital back to investors. Yes, we were not able to deliver the returns on that particular property, but huge lessons learned on how to really, be super cautious on the tax front.
All right. Give me a digital or mobile resource you recommend for your business.
A digital or mobile resource. Look, I think if you want to learn about, investing, especially multifamily investing, there are a lot of digital resources. There's Bigger Pockets. There's a whole bunch of different apartment education, channels you can find on YouTube. I don't necessarily have a specific resource I would point to. I would just say that there's just a lot of information out there that someone who's dedicated could really get to. Otherwise, there's also passive investor education systems. I know Joe has some, Joe Fairless, that is, he runs this passive investor, I think, online sort of a course kind of thing that people can go to. But yeah, those are probably the ones I'll point to.
All right. Give me the book you've recommended or gifted the most in the last year.
The book I've recommended or gifted the most. I used to gift a very, very old book by a gentleman by the name of Dale Carnegie called How to Win Friends and Influence People. I read that when I was 17, and it was, there's a lot of cliched stuff in it, but it was transformative in my thinking at the moment when I realized that a lot of what matters is how you're able to build those trusted relationships with other people. Really, that is really the core of that. It gives a lot of tips and strategies, and some of these are, not what you would necessarily want to follow today, but I think it's a great foundational book. Today, if I was going to talk about what book would be interesting, there's a variety of them. There's one called Influence: The Power of Persuasion. I forget the author's name now, but a very solid book that talks about
Cialdini, I think.
Yeah, it's
I got that up here somewhere.
Yeah. I read it, a couple of years ago now, but solid book on really helping you understand how people work and how their minds work.
Yeah, excellent book there. Give me a daily habit that helps you stay focused on your goals.
The one daily habit is just honestly, the one that I'm consistent about is just being able to maintain a point of the day, every day, where I can spend 15 minutes just shutting down my brain, trying to meditate, and just trying to find a sliver of peace for myself, right? Because there's so much being thrown at us these days that just being able to take those 15 minutes to just completely decompress, focus, it allows you to sort of realize once again what matters to you in your life, right? And it allows you to come back to the realization, at least for me, that at the end of the day, I'm doing this because I want to be able to have the opportunity to be with my family. So, just that, I think, is probably one of the most consistent things that I do every day.
All right, give me your number one insight for multifamily investing.
Number one insight for multifamily investing, I think I'll if you don't mind, I'll address it to two different ways. One is those who are passive investors. Focus is on trust, really, especially in today's market and where things are going. You want to make sure that if you're investing, with a clear understanding that you trust the individual that is bringing you that project on being there to take care of your investment, right? On the people who want to be active, what I'm going to say is that really what matters the most is action. Because too many people end up in focusing on watching videos, learning, doing courses, joining masterminds. And I've seen people spend hundreds of thousands of dollars doing this and yet never do a single deal because they're just so wrapped up in all of that they're never really taking action to make something happen. The bottom line is take action. If that means joining forces with other people who are taking action, do that. Don't be wrapped up in this idea that you have to do it all yourself, right? So action is really what matters the most.
No, I love that. And I really like the fact that you talked about figure out how to take action. And sometimes that means partnering up or finding an easier solution to move forward as opposed to waiting on that next deal. So great point there. Let's lighten the mood here. You are down in Texas, great food options there. Give me your favorite place to grab a bite to eat.
Favorite place to grab a bite to eat. That is a really hard one because Dallas has turned into one of the largest, diverse cuisine areas that I had imagined it could be. In fact, there was an article saying that it's now rivaling New York and maybe even Dubai in the amount of cuisine options. But I will say that I love Tex-Mex, I love Mediterranean, I love And I've been able to experiment with a whole variety of Indian food, which is an interesting thing because most people look at Indian food and they think of like one or two dishes and think that's it. But there's just so much variety across the different cultures of India that I've actually found food of different cultures from India and other parts of South Asia, from Pakistan, from Nepal, from Bhutan, Sri Lanka. Um, that has been amazing. I've enjoyed that.
I love it, man. I love it. Well, listen, Ike, you've given us a lot of great information. I loved hearing your journey. And one question I want to go back to in a second here. But hearing your journey, how you kind of got started in the space, why the scale of apartments was so intriguing to you, you know, having those two investors out of 30 or 40 who decided that they wanted to work with you on that first deal, and how their networks, and those referrals really opened up the door for you to grow your business where you're at today, over 1,300 units in your portfolio, over $270 million worth of apartments under management there. Being able to just scale and grow and being transparent and being honest is able to, what's the thing that helped you drive that success in your business. The question I want to go back to is, you mentioned, coming from Boston to Texas and that drive, and the person on your team was telling you that they just invested in apartments. Did you just decide right then and there to get in apartments, or what was the next step for you? Did you do some research on it? Like, how did you make
Yeah.
that transition?
Yeah, no, no, it wasn't like right on the spot. It was intriguing enough that I wanted to study it. I wanted to learn more. So I asked her to connect me with the sponsors through whom she had invested, spoke to him, and then he recommended, a few books that I could read. So it's an interesting story because the person talking about is Joe Fairless, and my uh, colleague who was investing with him. I spoke to Joe, and Joe was at that time. I think he had done maybe a couple of projects in Houston, and he had done one project in Cincinnati. So he told me to read a couple of books. I found a book by someone called Peter Harris, who was in this business many years ago. So it was a fascinating book. In that book, he talks about a student of his who buys an apartment in Cincinnati. I'm like, this is the strangest thing. And asked Joe, and he's like, yeah, that's he was my mentor.
Yeah, yeah, that's
So
funny.
just a funny thing, right? And that's just what brought the whole thing together.
I love it. And the other little irony of that story, when I love it, is in Joe's book, the best real estate syndication ever book. I believe you and I are both in the front of
That's
that book,
right.
right underneath each other in the testimonial. So I love that.
That's funny.
Ike, listen, man, always a pleasure talking to you. It's great having you on the show. Love all the information and the guidance you provided to our audience today. Again, if you want to learn more about Ike and his company, go to 110 Equity, 110 EQUITY.com. Ike, we'll be in touch, man. Take care. I'll see you again soon.
Thanks so much for inviting me. This was fun, John. Talk to you soon.